Well, it looks like we're headed for kind of a day today like yesterday, with the bond yields actually right now jittering around all over the place, but trending down. And basically no news in the financial markets until the Fed prints this afternoon. So flattish overall. Tesla bouncing around zero. So again, sounds kind of like yesterday. I have a super interesting analysis from AJ coming up in just a couple of minutes. So wait for that. All right. From Holmar's blog this morning, he says, look, go try the 12.5.1.4. I'm still on 12.3.6. Anyway, there's a new one out. And then try to tell me with a straight face that you're certain your car will never be driverless. I dare you. The anxieties of HW3 customers like me are unfounded. I'm not actually anxious at all. I know it'll be coming. Not even most HW4 customers, hardware 4 customers, have the update yet. Okay, then this is not that big report from AJ. This is a different report from AJ this morning. News, Uber CEO, Dara, yeah, I tried to pronounce that a few days ago. Khosrowshahi, something like that, continues selling Uber shares. His latest sale is worth $7.2 million and is not a predetermined 105B-1 sale. He sold last week 100,000 shares, or 8% of his total shares. This comes after a series of prior sales. 2024 sales alone, on July 15th, he sold 500,000 shares for a total of about 36 million. On June 17th, he sold 1 million shares for about 70 million. Uber has generated the biggest deficit in U.S. corporate history and is unlikely to earn it back before robotaxis wipe out Uber's profit margin. For this reason, it makes sense that Dara is cashing out. Robotaxis are just around the corner, and as soon as significant investors realize that Uber plays no role in this new ride-hailing market, Uber stock will collapse. That is not investment advice, but wow. This is from CNBC. Actually, I got a couple of, CNBC actually had a couple of worthwhile articles today. They do very well in their videos, but their articles, man. Anyway, Ford Motor this morning saying they are delaying production, oh really, of a new plant in Tennessee to produce next generation all-electric pickup truck and canceling plans for canceling completely a 3-row electric SUV, the company said Wednesday. Instead, Ford said it will prioritize what? Oh, hybrid models, because the $7,500 discount applies to hybrids as well as to full-on electrics. And so a bunch of companies have gone that direction. Government needs to get out of the way. They always have unintended results, and this one has been a big one. So we need that $7,500 discount to go away. Anyway, they're going to concentrate on hybrid models as well as electric commercial vehicles, a new electric commercial van in 2026, followed by 2 EV pickup trucks in 2027. Or they'll delay those or cancel them between now and then. All right, so this is also from AJ. This is the report I was telling you. Oh, did I tell what happened to the General Motors? Wait, first I got a General Motors article for you. GM, oh yeah. Mary plans to lead, it says in CNBC. That's not actually the headline. I made that up. General Motors Corporation expects to outsell all of its electric truck competitors as it launches a new Sierra pickup. This is going to continue to help protect our space in that premium average transaction price space. It's going to help us open the door to new customers, Finnegan said. We intend to be the retail leader in the electric vehicle truck space, and we're going to have a fuller breadth of product to really help us achieve that. Mary led. I'm sure that's 100% right. I'm absolutely positive. All right. So according to AJ, this is arguably the most important chart for Tesla investors to understand. It also explains why Tesla is poised to double in the next 12 to 18 months. Now, take into consideration that nothing he says here has anything to do actually with Robotaxi or with Optimus. Okay, so this is foundational, just regular cars, FSD, and energy. Number one, a review of Tesla's stock pricing history shows that the implied PE ratio for Tesla, based on Tesla's next 4 unreported quarters, in other words, this is the resulting PE ratio if consensus estimates were 100% accurate. Over long periods of time, number two, over long periods of time, Tesla was valued mostly or near 71 times later actually delivered earnings. This demonstrates that Tesla has been trading at a significant premium. Even most high-performing tech stocks trade only around 35 to 45%. We can call this valuation outperformance or premium the Tesla or Elon premium, or TP. Number four, as long as Elon runs Tesla, it appears unlikely that the TP will go away. Both small and large investors recognize it's unwise to bet against Elon. Investing with Elon tended to be a winning strategy over and over and over again. By the way, did you look at the Brian Wong video yesterday? Man, I'm gonna put that up later. If you didn't do that, you really missed out. Number five, the key insight is that any amount of incremental Tesla earnings is valued extremely high, or 71 times. This implies that as soon as incremental energy storage, number six, as soon as energy storage earnings from the upcoming and earnings from the upcoming lower cost vehicles, or even first FSD earnings, are being included in estimates, that the share price impact will be significant. Number seven, to double in market value, i.e. to go from a current 7 trillion to 1.4 trillion, Tesla only needs to generate approximately $1.42 per quarter in EPS estimates. Given the following: number one, new lower cost vehicle launch; number two, energy storage growth, Shanghai about to launch; number three, FSD starting to impact P&L; and number four, continued global EV adoption, it appears highly likely that in 1 year, August 2025, that the next 12 months EPS outlook will have increased to an average of $1.46 per quarter. This would imply a doubling in share price, or 100% return over the next 12 to 18 months. So if we're sitting at 220 now, 222, we'd be looking at 444, or over those all-time highs. Gosh, AJ is starting to sound like moi. Okay, this is Randy Kirk. Oh, that's who moi is, Randy Kirk. And please hit like and subscribe and notify and all that stuff, because later on today, we have got Brian White back, probably. I haven't checked in with Scott yet, but I haven't seen any real significant robot news. So I think it's going to be Brian White with a very fun video that we put together the other day. I think you're going to like it. And then, of course, Jeff Lutz on tonight. I'm looking very forward to that. So check all that out. And then Patreon would be a great place for you to visit and then drop off a little bit of cash. CNBC, I'm quoting again, CNBC. All right. They say of Target this morning, the company shares rose more than 10% in pre-market trading as Tesla showed improvement in generating profits. Who tends to show good increases in downturns in the economy? Walmart, Target, yes, all the discounters. On a call with reporters, Chief Operating Officer Michael Fidelke, that's what it is. Michael Fidelke said Target took a measured approach with its outlook because it's hard to predict consumers' mindsets and the state of the economy in the coming months. They're a little like, we're not sure where things are going. While we've been pleased with our performance so far this year and our view of the consumer remains largely the same, the range of possibilities in the macroeconomic backdrop and consumer data and in our business remains unusually high. The markets are heavily invested in the Fed making the I'm sorry, that was the end of that article. This is now Randy. The markets, in my opinion, are heavily invested in the Fed making that 25 basis cut in September. And they will be, and everybody's going to be looking at those Fed minutes today. They're going to be listening to the comments by Powell on Friday. Any hints out of any of that, of the fact that that 25 basis point cut's going to happen, But those odds have come down. They were at 100%. They're at last I checked, they were down around 75%, 75%. But there are 7 events happening between now and September 12th that are way more likely to matter than what is said today in the minutes and what's said by Powell on Friday. 3 Thursday unemployment reports will be out between now and then. The PCE will come out next Friday. The employment numbers on the 6th, the CPI numbers on the 11th. Now, there's a lot of other reporting that's going to happen. We will have them tomorrow. Back tomorrow, you're going to get some more PMIs, that are coming out tomorrow. You got stuff next week, like NVIDIA's, reporting their earnings and whatnot, that are going to be major market movers. Or potentially major market movers, because they're going to possibly tell us something about those Fed cuts. But I personally think this is going to be counter. I'm kind of the guy that goes counter. I think the Fed is inclined to not raise. I think that's where their head is. They don't want to raise, because the inflation rates are not even down to 2.5 yet. They're still up at the 2.9, 3.0, 3.1 range. I think they don't want to raise yet. And I don't think they're going to raise unless they think it's necessary. And I think the clear-cut necessity that everybody was seeing 2 weeks ago is evaporated. I believe we're already in recession, but nobody else believes that. Okay, well, not nobody else. There's a few other folks, even on this channel, but I'm saying the punditry, the guys who are supposed to know, including the Fed and others, don't think we're in a recession. They think that we're still continuing to have positive GDP growth. Well, those other reports and all the things that are going to happen between now, I don't think they're going to force them to move a day before they're ready to move. And so I think there's a chance they won't move on the September 12th. But the market believes that they're going to. And so if they don't, that will be problematic for Mr. Market. So in the meantime, the markets have been very cautious this week. Who said that last Friday or Sunday night? I said they would be very cautious this week, not moving a lot. So let's start with Mr. Tesla this morning. Last time I checked, it was down a tad, still down a tad, 72 cents. Dow Jones down a tad, 11.13. The NASDAQ up, not that bad, 84.96. Whoops, Dow Jones just went into positive territory, 12.11. S&P up 16.97. Tesla staying down at 81 cents. It was up, and now it's down again, looking like a repeat of yesterday. Apple is up, Google down, and the rest of the Magnificent Seven are up. Meta is having a very good day, up $11.30. We'll look at Meta. Not sure what happened, what's causing that. Okay, let's go ahead and look at the Cathie Woods. They are mixed. Yeah, just all over the place, but not by much. Again, kind of a repeat of everything we've just said. Let's go ahead and look at the bonds. They were really doing flips a minute ago. We'll see if they still are. We have got here we go. We've got the 10-year down 1.3 basis points. It was under 3.8 in the pre-market, and now it is at 3.805, just barely above 8. We've got the 2-year down more, down 3.8 basis points. So we are getting a little closer. We're down to 16 basis points separating. And then the 2-month is actually down this morning, shockingly, but it's 175 basis points higher. I don't know that anybody can explain that. Okay, we go from there to oil is up a little bit this morning, 73.56 for Texas Intermediate, 77.59, well under $80 for Brent. Natural gas, after exploding, is now imploding. Anyway, down a buck at $2.17. Gold is down a tad, still very close to all-time highs, 25.43. Silver down 0.18 at 29.46, staying under 30, having a hard time breaking through 30. Copper middle of the road, up 0.46 at 417. The dollar up against the yen, 0.33, down against the euro, barely 0.09. Bitcoin this morning up 180, not able to break through 60, sitting at 59,615. And there you have the report for all of those things. And just dropping back to Tesla again, $1.16 negative this morning. So continuing, as I said, the trend really of all day yesterday. All right, so what do we need to talk about? Oh, yes, we need to definitely suggest that you come back for Brian White later this morning. It is a very good show. He and I both gave each other high fives when it was over because we thought it was a really good job. We'll see if you agree, but come on back around 11-ish for that. And then later in the day, we'll have Jeff Lutz, as always, on Wednesday. He's always extremely informative. I am very much looking forward to that. I had that meeting, I had that video yesterday with Brian Wong, where we talked about what's going to happen with X and XAI. Believe it, I'm going to, spoiler alert. He thinks X and XAI will both have valuations of 80 billion within the next 6 months, 80 billion each. Yeah, he thinks buying $5 billion worth, Tesla buying $5 billion worth of X would be a very wise move, as he expects to see both of those companies, both of those stocks, their valuations go through the roof. And he explains in detail why. You can let us know if you don't agree, but that is what the show is about. And I think you're going to agree when you get done. So I'll put the card right there. And having said all of that, I will bid you adieu for now. It's been great talking to you.